Hi guys, welcome back to the channel. How you doing? If you're new to the channel, be sure to subscribe to see more videos like this one where we trade the markets the minimalist way by keeping it simple, by making clear and simple analysis, by using clear and simple indicators. Today I'm looking at the British pound Swiss franc. It's not a common pair. It's a pair that I rarely look at, but right now I see a very interesting opportunity here, so I'd like to share with you because I'm trading this pair. So the indicators that I'm using are the bottom top signal, the levels and zones, and the RSI Exhaustion. If you are interested in testing these indicators and more indicators, you find the link in the description down below. So the opportunity that I'm looking at is for a downward movement here, and which will probably touch down this level here. So let me draw some trend lines for you. We first need to check a few conditions. The first condition is going to be that the price is moving up, like in this case, but the RSI is moving down, and boy, it's moving significantly down. Because you see here we got a top, a peak, let's call it a peak in the RSI, which was way overbought, and then we got a second peak here, and the RSI here is just 79, like 69, sorry, so just a bit less than the overbought condition. The second condition, well, of course, so the RSI goes down, the price goes up, so we have divergence, which is what we look first. So the first condition is checked because we have divergence. The second condition is to have the RSI down here to be exhausted, which means that since the RSI is going down and we are expecting the price to go down, this exhaustion, bullish exhaustion, because it's green, it's saying that the price doesn't have too much room to go any higher, okay? This is because the RSI is going down and it is exhausted, and we are expecting that the price will go down as well. The last condition is the simplest one, which is to have a top, and we have a top here. We also had a top previously, so we use these two tops as a reference to initiate our trade. So the three conditions are divergence, and we have a significant divergence. We have exhaustion being the second condition, and we also have a top, so we can confidently place our trade. And I already set it in my trading account, and it looks like this. The entry price is going to be this one. Yep, the entry price is going to be this one. The stop loss is going to be, let me see, this one. Okay, why did I set the stop loss here? Well, because the price is currently moving up, okay, so we want to give enough room for the price to move maybe potentially somewhat higher and do not close our trade. So we want to stay quite substantially above this highest point here. Unfortunately, we don't have any resistance up here to use as a reference to set our stop loss. So we are just being a little bit generous with our stop loss, so that we allow the price to move within this area without stopping us out and taking a losing trade, okay? The target instead is going to be all the way down here. So it's going to be this support down here. This is because when you have this kind of levels which are given by the levels and zones, this is a support, and then previously it was a resistance since it was red. When you have this kind of support, they are mostly major supports. So they are levels which the price will eventually go, and will eventually go maybe multiple times. So it went down here one time, here another time previously, here another time, and see how it touched the same level but on the opposite side. So as a resistance here once, here another time, here another time. So these are levels which the price always like to go. And if we are expecting the price to go down, then why not targeting this level down here, because it is very likely, and when we have this kind of setup, it is very frequent that we reach this support and resistance levels. Of course, I'm using this level as a target. You can choose different levels, so you can be either more conservative and maybe say, okay, I have a low here, so maybe I can target this level here, and let me see, I have some structure here, maybe somewhat here, here, so it could work. Or maybe I will target a lower level here, okay? Or then you could be even more aggressive and say, okay, I'm targeting this level down here because I see that previously I got structure here, or maybe even before than that, but there is major structure. So it really comes down to you. I'm just showing a setup, a set of rules that I personally use to trade this kind of opportunities. Of course, your setup could be very different, but the point is that we use a set of specific rules, conditions, which are given by our indicators that make the trades very likely. Okay, this is the overall idea here. Okay, so the trade is set and I'll keep you updated on this. We are now into the trade and the price is currently within our stop loss area. We also got a second top here. Actually, it's the third, but a second here. You could just see this whole price action as a single top. I mean, the price is very close to the same level. We got two tops about at the same level, so this is pretty much one single top. The RSI is still going down, so nothing on a technical point of view has changed, and we are enough safe with a very generous stop loss. So let's just wait and see how the trade evolves. So the price is now moving down. It found quite a hard time to move down because you can see this volatility that happened within these candles, but now it's moving down. The most interesting thing is that the RSI is just dropping. It's dropping like crazy. So this means that this downward movement is definitely sustained by this downward movement of the RSI Exhaustion as well. So what I'm expecting is that the price will now continue to go down. I cannot tell how fast it will take to go down, whether it's going to make candles like this one, very long candles, or maybe it will take maybe forever to go down up to this level. The target is definitely a huge target because we are talking about almost a 4.4x return, which is very significant. So we need to be patient and keep track of the price action as the trade goes on. The price has kept moving quite rapidly to the downside, and then it looks like it's slowing down here. But I see that the RSI Exhaustion is now oversold and exhausted as well. So this is a good indication that the price is going down and it is sustained by the RSI in this run down. So right now the RSI could just stay oversold and become even more oversold and stay exhausted as well for a very long period of time, and at the same time the price could continue to go down and down and down. The only concerning situation would be if the RSI starts to go back up and make some divergence with the price, and then maybe within the price action we also got multiple bottoms. In that case it will be a warning sign, but right now it's totally okay. And since this price action is really fast and it's already quite away from the entry price, I already decided to move the stop loss to break even. So right now I am at break even and I'm on a risk-free trade, which means that in the worst case scenario, if the price comes all the way back up here, I am out of the trade with a tiny profit. But the most important thing is that I don't take this loss. So I will never take a loss from this trade. In the worst case scenario, I make money. In the best case scenario, I make a 4.4x return, which is excellent. So let's wait and see how we go on this trade. Another update, guys. So we actually got two bottoms, a couple here, a couple of bottoms here, and we also have a very slight divergence in the RSI. Okay, why I did not close the trade? Well, it's because for two reasons. First reason is that I believe that our initial analysis is totally correct. So I still believe that the price will come down to this level, and I also was at break even already, so I am enough safe to sustain this kind of price action. Moreover, if you look closely, the second bottom is actually a bit lower than the previous bottom. So this means that, I mean, even if we have some rising RSI exhaustion down here, this doesn't look to be actual bottoms, or at least major bottoms, which means that from this point it will start a very strong uptrend. So even if these were minor bottoms, I wouldn't care, because the price, it is true, they are bottoms, so the price might go up a little bit, but then it will eventually come down, and this is what we want. So when I see this kind of bottoms here and this kind of exhaustion and RSI movement down here, I typically don't care that much, as long as I still have the evidence that I was right at the beginning and I am already at break even, so that I'm enough safe. I have already safeguarded my trading account, and this is the situation I'm currently in. Moreover, right now the price has already passed to the downside these bottoms, so it means that we will likely see the price come down even more. In fact, the RSI is now pointing to the downside, so I'm very confident into this trade because everything looks good. You should never get scared if during a trade you see something like this. If you believe, based on your technical analysis, that this is going to be a major issue that compromises your initial analysis, then you should definitely close the trade, or be sure to be at break even like I am now, so that you are enough safe and you are protecting your trading account. But if you believe that this is or you could close the trade, and so that you are in a total peace of mind. But if you believe this is going to be some minor movement, like in this case, moreover, these are very close to each other, which is typically a weak signal, let's call it, then you should not compromise the output, the ultimate output of your trade, because otherwise, if you close here, even though these are just minor signals, you might compromise the long-term profitability of your trading account, because you end up taking profits too early, and you will probably allow for generous stop losses, and this is the best way to destroy your trading account. Okay, so guys, we are not over, because we are kind of halfway to our target, so it's going to be a long way to go, but let's see how the price moves. It was fast, guys. It was fast. The price just went past our target, so we closed the trade with a 4.4x return, which is absolutely excellent. We were even lucky because the price just accelerated towards the end of our trade, which is always nice to see because you get out of a trade quite rapidly. Of course, we cannot predict this kind of movements because we can only predict where the price is likely going, so which level the price will likely go. But what we cannot predict is how it will go there and how long it will take. Okay, so as you can see in this trade, the trade started quite smoothly, then it accelerated, then it had a slowdown here, and then it just dropped and accelerated again towards the end. So guys, I hope you enjoyed the video. If you did, please give it a like, subscribe as well if you didn't already, and if you have any question about the setup or the way I manage the trade, feel free to ask down below and I'll be happy to answer. Guys, I'll see you in the next one.